All right, welcome back. We got another red day in the market today. If you listen to my stock market update video over the weekend, I kind of talked about what the market is having to digest here. So a few weeks back, it looked like we were making a push to break through and maybe go for all-time highs on the NASDAQ, but we got rejected and we've had this quick move down. And again, this move down is, in my opinion, just the market digesting higher for longer on interest rates, higher inflation for longer, and that's going to cause the consumer to be in worse than expected position for longer. So the market's having to adjust to all those factors because a lot of data came in here with the Fed, inflation, all those things. So I could see us, having a weaker consumer and earnings struggling a little bit, but on the flip side, these companies are prepared. All last year, these companies got prepared for a weaker consumer, slower GDP growth. They got lean. They cut some costs. They raised cash, at least the good ones. So this is what I'm looking for in companies that are on my shopping list. Are you in need of cash? And if you are, I'm not buying you. Are you profitable? That's great. And what does your future earnings outlook look like? And yeah, there'll be bumps and bruises quarter by quarter, but that's okay. We take those bumps and bruises as long as it's not a trend down, right? You can trend up and have a little dip and keep going, a little dip and keep going, but it's a higher high each time. That's what I'm looking for with companies' earnings. So anyways, let's get to my plan. Some things I'm looking for. Opportunities to look out for. So in the green, we've got cash and bonds. So right now is the time to have cash. Not all cash, but some cash. Because there's opportunities, there's deals. And the deals may just be getting started. We may have months worth of deals coming our way. So have cash. Bonds are giving you a good yield, especially short-term bonds. I'm not a financial advisor. This is not financial advice. Do your own research. In my opinion, I'm not going any further than 2 years on bonds. So everything is short-term, short duration, because I don't want to be locked up getting 5% interest for 10 years because I know inflation is going to be higher than 5%. So the rate of return for me is not worth it to lock my money up for more than 2 years in bonds. But everybody's different. If I had $1 million, I'd put some money in bonds just to keep it there. Maybe I do have $1 million, but it's not in bonds. So other opportunities to look out for. Tech and semiconductor dips. So we're seeing technology that's been high flyer all year and semiconductors high flyers all year. They're starting to come back to reasonable prices and coming back to reality. So this is great because a handful of months ago, it's all AI, and these stocks were just you couldn't catch them. They were just going so up every single day. So now they're starting to come back down. So now it's to say, okay, everything's coming down. What are my favorites? Which ones do I want to pick and choose, and at what price? And why do I want to buy these? So we're getting opportunities for tech and semiconductors, and that's the future. Technology, semiconductors are the future. It's just figuring out which ones. Do you want to hold an Intel or do you want to hold an NVIDIA? Depends. It's not what you buy, it's what you pay. So there's a couple things there. You got to pick the right stocks, but you also have to pay the right price. Or you can just buy a basket, buy an ETF. Everybody's different. Everyone has to have a plan. Have a plan. So that's the whole point of this video, is to be ready. Get ready today, because the deals are starting and they may be only getting better. You need to have cash. You need to know what you want to buy. You need to know at what price and execute that plan. And don't get shaken out. The market's going to be volatile. The news is going to be all over the place. They're going to put all kinds of headlines in your face and, oh my gosh, I just bought Amazon and it's down 4% because the FTC is suing them. I'm going to sell. If you believe in the company long term, wait it out. So if you need to sell to buy a new kidney, that's a different story. But again, everyone has to make their own decisions. Just have a plan, stick to the plan. That's my advice for you there. Healthcare and REITs, these are things that we've had on for a long time. They're still there. I still like healthcare. I like the XLV ETF. Just buy the basket. I don't have time to dig deep into individual names for this sector. But REITs, you need to know what you own. The one REIT I really like is VICI. I've made a video on them. I've talked about them. They may get hurt with consumer not going to Vegas, but long term, Vegas is going to kill it. I love Vegas. I haven't been to Vegas since I was 6, but I like the idea. Money's going to be pumping into Vegas, entertainment. So REITs, know what you own, healthcare, still opportunities. Here we go. Things I am buying now, long-term holds. These are names we've talked about. In the orange, these are the ones that I'm being a little bit more patient on. In the green, these are, just bought some 10 minutes ago. So ENPH, we know about them. I'm looking at ENPH. I'll make my next purchase around 115. VICI, I really love. I'm looking to get some more at 28. Tesla, I'm looking to get some more Tesla at 215. We've got Amazon. Just bought some Amazon 10 minutes ago. I will look to get some more. 120 is my next purchase price. The SMH is the semiconductor ETF. I don't have it pulled up. I want to say my next purchase was 134 on the SMH, and the Qs, which is the NASDAQ, a broad basket. I want to say for the Qs it's 345. So these are all companies I currently have positions in, but these are the price points I'm looking to add. And for example, if I buy Tesla at 215, I'll be okay buying more at 195 or 175. I don't know where the bottom will be. To me, that's a price I'm comfortable paying for the long term. These are long term. Things I'm watching, AMD, semiconductor name, really like. 85 is a potential entry point for me. Palantir, this is one I trade around all the time, but I'm looking to start accumulating again back at around 11. Shopify is a new company that I've been really following for about a year or so. So I've been doing a lot of research on them. 45 is where I'm really looking at them. Under 50, I'm really wanting to nibble. The question is, am I going to allocate money to Shopify, or is Tesla at 215, right? So there's only so many stocks I can buy. I can only spread my capital so thin. So again, I don't know if we're in a little correction for a week, a month, a year. But if we're there for a year, maybe I bought as much Tesla as I wanted, and then Shopify pops up at my price point. So the other one on here is SOFI, 650. SOFI is at the bottom of the list. Again, I'd like to satisfy all these up here. I really like SOFI. Want them to get profitable. Same with Shopify. Shopify has profitable quarters, and then other quarters where they burn a lot of cash. So I didn't talk about one other thing on here. Selling options. I skipped this one. Selling options, I've talked about it in the past. I'm not going to go too deep into it. Right now, I've got some covered calls on some of my stocks like Amazon and Tesla. So when there's red days on Amazon and Tesla and I sold the call, I get to keep some of that premium, and that goes into my cash pile to go buy more Amazon and Tesla. We're seeing volatility expand. When the market goes down, volatility expands. So you can see on my Tastyworks platform here, IV 5-day change. Again, this is more of a trader. This is very, if you're a passive investor, you can end the video right now. Peace out. But this is for people that are looking to collect a little bit of premium on the positions that they have, or also collect a little bit of premium for the positions they want to enter. So I've got separate videos on options. Maybe it's time to give a little update on them. But real quick, don't buy options, sell options. If you have a current position, look to sell covered calls on green days. So for example, if I had 100 shares of Apple and I wanted to hedge my position, I would say maybe I'm okay selling my Apple shares at 185 in the next 24 days. If Apple goes from 170 to 185, I'll sell my shares. I'll collect $50. If it doesn't go over 185, I keep the cash. That's not that great of a risk reward, but let's say you're sitting with a bunch of cash and you want to buy end phase. So end phase volatility is really high. It's creeped up quite a bit. So let's say I know I want to buy end phase at 115. I can go in here and say I'm going to sell the 115 put. I'm going to collect $400 in the next 24 days. If end phase is below 115, I buy 100 shares at 115 and I keep this $400. So I get a little bit of money off of my cost basis for a stock that I know I'm okay with paying this price. So that's what I'm going to start doing with some of these positions. End phase, possibly. Palantir for sure. So again, this is for my options traders out there. It's volatility is back, baby. We have not seen these numbers for a long time. So that means the premiums are juicy. You can collect some income through selling options, hedging your positions, and also getting into new positions. This is all part of having a plan. If you don't know options, don't touch them. This is playing with fire. Do your homework first and have a plan and stick to the plan. So I hope this helps everybody. I'll be releasing more videos as we're going through this process. Just, have a plan, be calm. There's no reason to be fearful. There's no reason to be greedy. We got a long road ahead of us. So that's all I got for you guys today. Time to go sit in the pool. Peace out, everybody.